What's going on, guys? Welcome back to another video. And in today's video, we're going over some brand new definitive agreements that just came out, as well as some SPACs that I keep a close watch on and give a bit of an update on those. So before we get into it, if you don't mind dropping a like and hitting subscribe if you enjoy these videos, it really helps out the channel. Definitely check out the links in the description to the free Discord server, my Webull referral link, and the Patreon if you want to sign up for that. I post my buy alerts, my ideas, and option plays in there, so definitely check it out. Now let's get into it. So first up, we have ticker symbol SNPR. This is Tortoise Acquisition's second SPAC. We know their first one was Hyliion. So this is Volta, and this definitive agreement came out this morning. Volta is a leading owner, operator of public electric vehicle charging infrastructure that is prominently located in places where drivers live, work, shop, and play. They have a pro forma enterprise value estimated to be about $1.4 billion. This includes an upsized $300 million fully committed PIPE, and existing Volta security holders will roll 100% of their equity in the transaction and are expected to own approximately 64% of the company upon transaction close. So that is just something to be aware of. Now, we saw this gap up this morning. It's up about 33% and down just a little bit after hours. Chart is looking kind of choppy, but still sitting around $17. So it definitely held its ground today. We'll see how that holds up going forward. Now, let's get into what they do. So this article says, unique to the EV market, Volta's business model centers around evolving spending habits caused by the move to electric vehicles by building a charging infrastructure that reinforces desired behaviors at each location. Volta's charging stations, catch people's eyes because they look sophisticated. It's a media network providing brands a way to reach millions of shoppers before they even go in the store. These sponsor-supported charging stations provide energy to customers who are able to plug in their vehicles when and where they shop. And Volta's business partners who have Volta charging stations have actually reported an increase in spend, dwell time, and engagement on site. They're currently located in 23 states and over 200 municipalities. Volta's approach has gained significant acceptance and penetration in the market. Volta will anchor the infrastructure change, transforming fueling locations away from standalone gas stations to high-traffic locations in the community where consumers live, work, and play.
We found that it made more sense to connect free charging with brands and with properties than to try to charge electric car drivers for charging itself. The idea is if you put stations in the best locations, in the best cities, in order to get people excited about the cars, that effect can rub off on the brands that sponsor and host.
So Volta does not manufacture their own charging stations, but they are looking to tap into 3 separate markets to create more revenue. That would be charging, data collection, and advertising and marketing. So charging is pretty self-explanatory. People have to pay to do that. Data collection could be anything from what type of cars are using their charging stations the most, what locations are doing the best, and how much traffic is generated. I'm sure there's more that I'm missing, but that's what comes to mind for me. And then marketing and advertising is just basically different companies paying to have their advertisements on the Volta charging stations, which according to these articles in the presentation has increased sales by 35% when they are advertised on the Volta charging stations outside of something like Whole Foods. So these different revenue streams will definitely help Volta generate more revenue in the future and hopefully hit their growth targets. So here's Volta's long-term financial projections. Now keep in mind these are just projections and it's supposed to look attractive, but they're going to grow year over year pretty massively for the next at least 5 years, what it's showing on here. Gross profit's going to increase nicely. It says Volta's average 2021 to 2023 estimated gross margin percentage is 10% higher than other EV competitors, and then their EBITDA will be positive come 2023. So it'll definitely be interesting to see if they can meet these goals. So next up is another Gores SPAC. They recently took United Wholesale Mortgage public back in January and also LAZR in 2020. So they do quite a few of these SPACs. Now this is ticker symbol GHVI. Some people may automatically be turned off to it just because of how poorly GHIV did. I'm not too sure about that. That's just a guess because it's only up 10% on a definitive agreement announcement, which has been a bit more rare to see in the SPAC community right now. Usually everything flies upon an announcement. So basically Matterport is a leading technology platform that turns buildings into data to deliver unparalleled property insights and analysis, which is pretty cool for real estate and stuff like that. And with more than 250,000 subscribers in 150 countries, the business combination will enable global enterprise growth across industry verticals while continuing to invest in software, artificial intelligence, and platform technology strategy. This is a pro forma enterprise value of 2.3 billion and 345 million in pipe. So it's only up 10% today and down a little bit after hours, so sitting around 1340. Still a decently attractive spot to get in. It hasn't shot up too much, which is kind of surprising the way SPACs have been going, but we'll see how this plays out as the weeks go on and more news comes out. It was founded in 2011, and the company has created the largest spatial data library in the world with more than 10 billion square feet of space and growing. Their recurring revenue software as a service model grew its subscriber base by more than 500% in 2020. It says here that the real estate market is the largest asset class comprising commercial, industrial, and residential properties, worth an estimated 230 trillion, so they definitely have a large TAM. The global real estate market is more than 3 times the estimated value of all global equities combined. And below it says, for building owners, underwriters, and occupants, managing the life cycle of a building is unnecessarily costly, time-consuming, and inefficient in the modern world. So I did cover this one pretty quickly here, but here is how they make money, and that's through subscriptions, licenses, services, and products. And then their total revenue shows that they're going to be growing year over year, or estimated growth year over year. And that's what you want to see with these growth companies. You want to see them constantly improving. And then in 2023, 2024 is when they're estimated to really start taking off. And then that 2024 year is when their EBITDA becomes positive, and that is a good sign because it's only a few years away. Now, this one does remind me, kind of in the same category as how Desktop Metal and MP Materials traded in the low teens for the longest time until post-merger when they really took off. So it'll be interesting to see if this one, since it's only up a little bit upon a definitive agreement, will this trickle back down into like the $12 range? It kind of seems like that's where it's headed. Maybe people aren't too interested in this one, or there's just a lot of SPACs out right now. So it'll be interesting to see if people flow into this one or just kind of ignore it and where it goes post-merger. Now I wanted to get into some plays that I'm watching very closely, and the first one is LGVW, and that's Butterfly Network. So they're a digital health company that's working to enable universal access to superior medical imaging through a portable handheld ultrasound device, and that's the Butterfly IQ. I made a whole video on this if you want to check it out. I think this is pretty disruptive and it's pretty cool. And then it says down here that, the merger vote is scheduled for February 12th, and there's 175 million in the pipe. There's 414 million in held in the trust. That's really not that big of a pipe, so that doesn't, worry me too much. According to their revenues, they're trading at a multiple of 10.6x. While the valuation might seem high for a company that is just a single product in the market, the revenue potential going forward is also high. Now, what really interests me about this is that the last Bill Gates-backed SPAC was QuantumScape, and that took off post-merger. Now, I know that's just pure speculation, but this one really hasn't hyped up that much. I mean, today it gapped up to 24, but up until today, it was just around, $20 for the longest time. And ARK Invest just bought last Thursday or Friday, so they're adding more before the merger, and typically ARK just somehow knows what's coming next. So it wouldn't surprise me if post-merger this heads higher. This one is pretty interesting to me, so I'll definitely be watching it. If it comes down, so we gapped up. If it comes down to fill the gap below, anywhere in the 20 to 21 range, I would definitely consider adding. But you can see the MACD's crossing up, so that's bullish. But it is approaching overbought, so we'll see if it comes back down and fills this gap below. But it's just something I wanted to mention, and I am very interested in this company. They are disruptive, so definitely keep it on watch, and we'll see how the merger vote goes. Okay, so really quickly, just touching on IPOE SoFi. You guys know this is one of my favorite SPACs. It's actually my favorite SPAC, and I will throw up my recent DD I posted in the Patreon for you to read through. Now, this is selling off because it did gap up quite a bit, and people are taking profits, but also the Hindenburg article did hurt the Chamath SPACs a bit. But I just look at it as a buying opportunity. This is a great time to be loading up on IPOE, and I think this is going to be one of the fastest growing fintech companies in the world, and this is one of the best SPACs to ever come out. Now, they have an amazing team and an amazing CEO, and they really care about their customers. I recently watched an interview that made me feel even better about SoFi, and it had to do with them adding crypto to the SoFi platform just because customers wanted it on there. And now that people are switching to this brokerage, people want options, they want night mode, and they care about their customers. And they basically said, we want our customers to run the platform. They want their customers to tell them, what changes to make, what upgrades to make. So that's what I like to invest in. I like when the CEO and the team really cares about their customers and improving things for their customers. So we basically saw this thing gap down, and we knew it was going to fill the gap below, and it could even still touch like 2250, but it does look like a falling wedge in my opinion. I'm not the best at TA, but it looks like that to me. I could definitely see this heading higher after selling off quite a bit. So, you tell me what that looks like. If it hits this, I could see it, touching maybe 2250 area and then going higher, but it's just something we'll have to see. Right now, the MACD's bearish. It's approaching, neutral, maybe going to oversold here in a bit, but definitely on watch, and I'm adding on these dips. Last up is BTWN, and this is Bridgetown. This is the Tokopedia rumor still, but we've seen this one fluctuate quite a bit, anywhere from 1350 to 1650 over the last couple of weeks, and I believe it's even been as high as like 17 or 18 before. So Tokopedia would be an amazing target. This reminds me of Alibaba a lot, just going on their website and checking out their marketplace, and it just looks a lot like the Indonesian version of Alibaba. So I think upon an announcement, this thing would fly. I think this is an amazing target. Still not sure if it's going to be Tokopedia. There's a lot of speculation there, but they did raise $595 million. This is backed by Richard Lee and Peter Thiel, and I think if we were to get back into the 14 area, that's definitely an attractive spot. It's a little risky because it's not near NAV anymore and they don't have a target, but just keep it on watch. If they did announce that, which I do think Bridgetown will announce something soon, it would take off. And they already have their second SPAC ready to go, so that's why I do think they're closing in on this one. So that's pretty much it, guys. Just wanted to touch on these new definitive agreements as well as what I'm watching in the market right now. Hope you enjoyed the video, and if you did, feel free to drop a like and hit subscribe. It's much appreciated. Also, check out the links in the description, and have a good one.